Last year growth in top line was around 32%, and current financial year we are aiming for further growth from the PPF as well as new window film. So future growth is possible since multiple initiatives are in pipeline, as explained by Deepak in the opening remark. That one is on the capacity expansion. The new lamination line, we are expecting commercial production from Q2 onwards from the next month. And two, we are increasing manpower in marketing. And three is we are increasing marketing advertising budget. We already increased the marketing advertising budget for training, social media, marketing event, what Deepak has explained. So we are committed for the business growth of our company. Thank you all. And with this, we can open the floor to the question and answer session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Sameer Desai from PH Capital Limited. Please go ahead.
Hi, am I audible?
Hi, you are.
Hi. So my question is on the line of the distribution side of the business. So just want to understand, so has there been any consideration of probably going downstream into distribution by maybe acquiring some stake of an exclusive distributor? Because as we understand, I think the distribution business is sort of key for growth in various geographies, and it does have a relatively higher margin. It's a high margin business as well. So just any thoughts on that side, and also how we sort of maintaining our bargaining power with distributors considering the other big players. So yeah, that's more, I think.
So on, if I understood it correctly, that you are asking if there are any plans to acquire the distribution network to increase our business, right? So the thing is that we are considering some kind of expansion as we mentioned earlier, that it might be organic or inorganic. And in that line of business, we have some plans in USA where we are evaluating some opportunities where this business might come all together with such deals. And that's the one part of the question. And may I ask the second part what you wanted to know?
So just from the bargaining power angle, or even from the agreements that you all have with distributors in different countries, I mean, are they exclusive in nature, or like how does that side of things work?
Yeah, they are exclusive in nature in most of the countries. However, there are some who have the liberty to buy from others as well. But I would say majority of them are exclusive in nature. And when we talk on the bargaining power, in terms of our cost increase or anything happens, any kind of cost increase happens, then we pass it on, because ultimately the distributors, we have a responsibility towards distributor that he sells the maximum of our product. So we, whatever the cost increase or decrease happens, we negotiate based on that. So it's a very transparent process with our distributors.
All right. Thank you so much, sir.
Thank you.
Thank you. Our next question is from the line of Anshul Shah from Alpha Plus Capital Services LLP. Please go ahead.
Hi, congratulations on a nice set of numbers. My question was regarding our capex. So as per your IP, you have two capexes, 135 crores, which is I think for the PPF and lamination line. So has that been completed? And what about the other 135 crores that you are doing? And when will that come online? And what is the turnaround that you are going to expect from that capex?
So there are two trench of 135 each. So total 270 crore was the capex plan. So first tranche of 135 was utilized for PPF plus upgradation of our existing lines. Okay, and that is already completed in last year. Another tranche number 2 is 135 crore we plan for new lamination line, for which, as Deepak explained, it dry run is going on, and in the next month onward, we are expecting commercial production for that.
Okay.
This new line is going to contribute around 300 crore additional revenue going forward.
Okay. And so the PPF also, I guess, in the earlier presentation and earlier calls, you had said that that would also be contributing close to 300 crores. I think it's been operational for almost a year. So are we at target to achieve that, or how much are we actually doing in PPF? Would you be able to help us with that?
Yeah. So that was commissioned more than 1 year ago, and that is contributing to the additional revenue growth. PPF line we are using for not only for PPF, even we are using for intermediate products for window films. So both of them has started contributing in the top line as well as bottom line. And we are on the track as per the target and budget whatever we have planned. We have achieved in last financial year FY22, and we projected that the full capacity utilization will be happening in next 2 years.
By end of 2024.
Okay, by end of 2024. Okay. Fair enough. And my next question was, since we have, so what would be the contribution from the of the domestic market in the PPF business? I think you said that it is slightly above what you had expected.
Yeah. See, initially I would say that was like our idea was 95% of exports, because PPF is very well-known commodity in US market and European market. And in India, hardly, there is very low penetration. So in line with that, we thought it's very difficult to have that kind of product in India. But after we started last year selling in India, and the numbers have been very, exciting for us. And going forward, initially we planned only 5%, but now I'm thinking that this business might go up to 20% of the total business.
Fair enough. Does the new capex that you have, which is coming on stream, able to produce PPF? Because most of your products are, kind of interchangeable. So expecting higher demand for PPF then. Yeah, I guess PPF is also slightly higher margin than your other products.
Yes. The new line is basically will produce window films. But we can also produce PPF. But we already have a PPF line which is being dedicated for PPF business also only. So the new lamination line will be dedicated for window films. But of course, when the business changes with so much of geopolitical risk and the demand might go up and down, so there is a facility of swing. Means we can also produce PPF out of it.
If I make a last question, how there is talks of imminent recession in the US. So are you kind of seeing any slowdown in demand, especially in the last 1 or 2 months, since used auto car sales and new car sales, everything is coming down over there?
Yeah. See, as of now, we are not seeing any slowdown on the demand, but we also have continuous dialogues with our customers in USA and rest of the world. And USA market definitely, because of the current inflation rate is very high, and the cars production has definitely gone down. So these people are expecting a slowdown in the next year, recession next year. But these all are, this market ups and downs, and this will happen with everyone because all of us are on the same boat. But looking into our capabilities, I can assure all the investors that our capabilities in terms of good quality products and right pricing for the products, usually we are affected the least. I can say in that way. But definitely I agree that might happen, and we are not seeing any such situation right now, but we are aware of this situation and we'll try to do best out of it.
Fair enough. So just one last clarification on the capex. So both the capex put together of 270 crores at full capacity utilizing probably by end of FY24, do we expect like the revenues to come in from that in the tune of to the tune of 600 crores?
Yeah, it will come on stagger manner.
Yeah, I understand, but the potential is up to 600 crores from this capex.
Yes, the potential, the capacity which they are adding, and the potential with full line when the lines are full in a staggered manner, the total output would be to the tune of 600 crore. The plant.
Fair enough. Thank you. That was quite helpful. I'll get back into the queue.
Thank you.
Thank you. Ladies and gentlemen, if you would like to ask a question, then please press star and 1 on your telephone keypad. Our next question is from the line of Nikhil Agarwal from VT Capital. Please go ahead.
Yeah. Good morning, sir, and thank you for the opportunity. So my question is regarding your raw materials. Your raw materials for your sun control films and shrink labels is PT and MEG, right?
No, actually, if we see the raw material for films, polyester film is PT and MEG, and for sun control film is polyester film. Yes, ultimately, if you want, yes.
It's PT and sir, for your paint protection films.
Some of the components are of same polyester film, but the major one of the major component is TPU, that is thermostatic polyurethane film.
TPA.
TPU.
Okay, TPU. So what I wanted to know was, like, do you procure only your pet chem? Do you procure these on a spot basis, or do you have a sufficient amount of inventory at all points of time?
I would ask a clarification. You are talking of TPU or polyester film?
Polyester film, the PT and MEG.
Yeah, on PT and MEG, we have long-term contracts with our supplier, and it is a guaranteed supply because the supplier is very big in terms of capacity and many plants of the same products. So the supplies are guaranteed, almost guaranteed, unless there is something force majeure happens on all the lines.
And the pricing is on import parity basis.
It is on?
On import parity basis.
Okay, sir. So, like,
prices basically.
So, I'm assuming you procure your raw materials from Reliance. Am I correct?
Yeah, you are correct.
Yeah. So like what I wanted to know was like now since Reliance they've acquired Alok Industries, which is into making technical man-made textiles. So a lot of their production of PP and MEG that goes into into the production of that goes into captive consumption basically. So
yes.
Is that still not any threat to you? I mean, are you looking at other alternatives to it? Or are you still dependent on Reliance?
See, I would answer in a different way that we have long association with Reliance, maybe for more than 20 years, and if you say the availability of the product, we can arrange from anywhere, but we have this long-term agreements with them, and which they are fulfilling very nicely. So, and second thing, whatever they have acquired in the market does not compete to us directly. or even indirectly, because as you mentioned about Alok Industries, that is basically into the filament fibers and that kind of business which we are not into. So there is no threat or something because the agreements are very, very long term.
Okay. Yes. Yes. And so also your raw materials cost has not gone up by a huge margin, considering in February we all know what the situation of Brent was. So I'm assuming, because as you said, you procure your raw materials on a long-term contract basis. Is it a 6-month or any tenure you can say? Like 3 months or 6 months?
See, raw material, these petrochemicals are dependent on two things. One is the cost of its raw material, which is ultimately crude oil and then naphtha and all. And second thing is the demand supply. So considering both of things, there has been an increase in the raw material prices continuously if you compare with the last year, because that was a low base year, FY21. And FY22 was like the crude oil went very high from the base. And this year also it is now at the historic high if we leave some years in 2008, 9 and 10. So I would say the raw material costs will definitely go up. We are seeing it going upward trend, but we have been able to pass on such kind of costs to our customers because we make them understand like the value chain, and all our competitors world over are facing the similar issues. So we are able to convince and pass on such kind of cost increases to our customers.
Okay, sir. And so you got significant inventory gains this quarter as well. So that was basically the raw material price, because of the raw material price inflation.
Can you be more specific, because I couldn't hear it properly?
So you've got significant inventory gains of about 8% of your top line during the quarter. So that was basically because of the raw material price inflation, I'm assuming?
No, it includes the stock in transit also.
Oh, okay, sir. Okay. And so your other income was up during the quarter by almost 100% compared to the previous quarter. So any reason for that?
There is unutilized redundant assets which we have sold out, monetized it. So that's a one time of extra income in the last quarter.
Okay, sir. And so just one last question.
Sorry to interrupt. This is the operator. If you have more questions, please join the queue afresh.
Okay. Thank you.
Our next question is from the line of Dhaval Mehta from Aditya Birla AMC. Please go ahead.
Yeah, hi. Thank you for the opportunity. So my first question is, let's say for our sun control film and PPF film, how is our go-to-market strategy? Like we directly sell to OEs or we sell to the dealers or the garage owners? So if you can help me with that.
Yeah. See, our business of window films and paint protection films, it comes under consumer product division, where we have a distribution network in all over the world, where we sell the products to distributors, and distributors sell it to dealers, and dealers are either selling to shop owners, or they are directly using applicators to sell the product.
Okay. So we cannot tie up with an OE, let's say, to sell our PPF product?
Yeah. So, as I said, now in window films, we are tied up. We have some of OEs already in our portfolio. Where actually what happens, the distributors, it is again through distributor, because distributor on our commercial terms, everything we sell on advance basis. So we have distributors who cater to OEs also. But as I said, we have now changed our focus, and we are focusing more towards the marketing of the product, where we have now in contact with 4 or 5 major OEs in India. and in USA. And in India, I would say in paint protection film, since we have done on paint protection film in India, I'm saying that it's not a market which we are trying to take from somebody. We are creating our own market in India because the way we are now doing marketing of the product, we are getting lot of inquiries and we are selling lot of product, as I said, which is already 3 times or 4 times than our budgeted numbers initially. So for that, and we have got interest from OEs also, and we are in advanced level of discussions with them. Like products have been qualified. It's only the commercial terms we are now negotiating with OEs so that they can directly fit it from the dealer's showroom only.
Okay. So currently, what percentage of cars, let's say in India and in US, use PPF?
See, the number is actually, these things are, not published, but I can say in the last estimates and currently what we are saying, roughly 10%, in USA it's up to 15%, but in India, I can only give USA numbers because India is almost nothing, where we are planning something to do because we are the only manufacturers in India. So I would say between 10 to 15% in USA.
Okay, and India less than 10% or around 10%, as you mentioned.
India, it's very low, but if I say we have been studying, our marketing team is going and surveying, and we are also aiming for the 10% number for the cars which are more than 30 lakhs. We call them in luxury segment for PPF. So that targets we are keeping internally. But I would say the market is in India it is already not even a percentage, but we are trying to move it to the level of 10%.
Okay. So in terms of margin profile across our various products, if you can help us with, let's say, if not quantitative wise but qualitative wise, how the pecking order of our margin profile is.
You mean product-wise?
Product-wise. Like, let's say PPF, I'm assuming will be relatively a higher margin product compared to, let's say, thermal lamination or something like that.
Yeah, if I say then I would say PPF, then window films, then shrink films, and lastly thermals.
Okay.
That is basically mostly commodity.
Okay, and in terms of growth profile, which particular segment you see that in next 3 to 5 years can be the fastest growing for us?
PPF, I would say PPF, architectural window films, and shrink films.
Okay. So in US, how is the competitive intensity in PPF market? In India, you mentioned that you are the only player. However, the market is very, very small. In fact, you have to develop the market. But in US, where the market size is around, let's say, 10 to 15% of the overall car market, how is the competitive intensity? See,
they are very known players, if I would say in that way. Like Eastman Group is primary one, and neck to neck is Expel, and after that 3M comes, and then we have started our activities, and we can be in that range after that. So it's Eastman Group, which has 2-3 companies, and then Expel and 3M. And then capacity wise we can be we are looking for this space now, third, fourth, whatever we can get.
Okay. And our pricing will be similar to theirs or it will be lower?
See, traditionally, because we are trying to penetrate market more, so I can say that it will be competitive as compared to them. So a little bit lower than them.
Okay. My last question, sir, in terms of, let's say, capacity utilization, what is our current capacity utilization if we exclude the 270 crore capex which we did in last 2 years? So if we exclude that, what would be our capacity utilization?
It's full. It's all the time full because there are products which we have now order booked for next 2-3 months. So all capacities are fully booked as of now.
Okay. So now with this 270 crore capex, one already coming up last year and other expected in next 1 month, so we can generate additional around 600 crore. Part of it may be already been in the base, but let's say additional around 450-500 crore we can generate in next 2-3 years.
Correct. Yes, correct. If all goes well, this should be.
Mr. Mehta, this is Peter, the operator. If you have more questions, please join the queue.
Sure, I will do that. Yeah, thank you.
Thank you. Our next question is from the line of Ritesh Chheda from Lucky Investment. Please go ahead.
Sir, what is the size of the PPF films, paint protection film business now, since it was first year of operation last year? And my second question is with respect to margins. So you mentioned that 21 was a year where the metal prices were lower, and 22 is a year where metal prices were slightly higher. So it's been about last 4-5 years where our margins are in between 15 and 18%, but there were years before that where there was single-digit margin. So is the reference number now this 15 to 18% range, or there is some element of benefit of cycle which would have flowed in the last 3-4 years in your margins, as we have seen in a lot of film companies?
Yeah. We cannot be compared with other film companies, because if we see common base would be only 25 to 30% of the market. So this number which we are seeing, that has primarily came from the fact that the number of the specialty product used to be roughly 48% 3 to 4 years back when you are referring to that, and now it comes around more than 70%. So that's one. And second thing is the export also have come in a strong way to 70% level. So with these two things, I would say that the numbers we will try to be at that number, and that is the reference we are saying now. So on commodities, I can
the current margin number 17-18.
Yes.
Okay. On the first question, sir, the PPF business, how much are we running in the last year, FY22?
See, this plant, as last time, there are two statements. Like one is this break.
Hello?
Ladies and gentlemen, we have the line for Mr. Joshi disconnected. Please stay connected while we connect him again. Ladies and gentlemen, we have a line for Mr. Joshi connected. So you can proceed with your question.
Yes, please ask, because I was replying to the question about the PPS utilization. So line is now more than 50% utilized, and it has last year it achieved the break even. So now it is giving us margin. So it has gone up to that level, up to 50.
So we are doing 100 crores of revenue in the first year of operation.
80, 100 is.
Yeah, that's correct. That's in the line.
Yes.
Okay. And sir, last question. Let's say even in the other film companies, we have the specialty portfolios, which is anywhere between 35 and 40% of their business. But they have also gone through their cycles of, profitability from, let's say, lower end 13, 14 rupees a kg to higher end of 23, 24, which was visible in the last 1.5 years. Would there be an element of some profit commodity element which would have flowed down in your numbers in the last 3 years, which needs to be adjusted, or you don't think that way?
See, you're right that there whenever such cycle comes, so we also get benefit. But what we do, we have most of the.
Hello.
We have loss of connection for the management again. Please stay connected.
Extremely sorry, gentlemen. Just please wait for a little while. We're trying to get.
Ladies and gentlemen, we have the line from Mr. Joshi connected. So you can proceed.
Hello.
Yeah, sir.
Yeah. Really, I would like to apologize to all of you that there was some technical issue on the landline. So, yeah. So, I was talking on commodities. Like the market, there is a swing on the commodities in last 1.5 years to 2 years, mainly because of this low raw material prices, and at the same time, packaging demand have been very good. But in our case, we have the fungible lines where we can swing them based on our specialty or commodity, wherever we see better margins and better margins on that. So if there is some discounting is to be done, that is very low or almost nothing because of the specialty nature of the business, where we can utilize our line for the special products.
So your response to my question, if I have understood, is that you think there is no element of a beneficial commodity, beneficial film cycle to your margins. So, there is no such benefit now at this 17% margin number.
Yeah, correct.
Okay, sir. Thank you very much, sir, and have a great day, sir. Thank you.
Thank you.
Thank you. Our next question is from the line of Naushad Chaudhary from Aditya Birla Sun Life AMC. Please go ahead.
Hi, thanks for the opportunity. A couple of clarifications, sir. Firstly, in your opening remark, you mentioned that we are entering into this Garware application studio and we are targeting 200 studios by FY23, if I heard it correctly. So just wanted to understand what is the thought process behind this model, and what would be the overall economics of this? Is this something similar to Expel, what Expel does in the US market, or would it be different than that? And what is the thought process and economics of this?
Yeah. See, the Garware application studio, the concept is to increase our marketing drive in the domestic market, where, as I mentioned, we found very exciting results for the initial launch of the product. So this basically, as I said, we are doing roughly training for 50 trainers, applicators in a month, so that they are going all around India and creating a buzzword for PPF, and then Garware PPF. And to enable all those, to enable such kind of drive where we are training so many people, to have them to us a place where they can apply our PPF into the cars. So together with our distributors and dealers, we are engaging those applicators so that they can be all in all major cities of India, where they can they can do the cars with PPF. And this is again came out from a survey which we continuously do, and our trainers and applicators also share with us that in many places in India, people are ready to do their cars with for PPF, but they do not have the right place and the right applicator for that product. Like if you go to some places like Jharkhand, like Ranchi and then Jaipur and all those places, these people have internal survey has shown that there is a strong need of the centers where it can be done very neatly and cleanly with the right kind of applicator, because this is a product which ranges from 1 lakh onwards also for the car owner. So in view of that, we have launched this initiative, and definitely this is the aim, as I said, is to reach around 20% of our PPF sale in India. So that is basically the drive behind it.
Okay, if I have understood it correctly, these would be these 200 stores who would be studios who would be investing in these studios? The company would invest, or the distributor would invest, and who would be operating these studios?
This is basically an operating expense basis. I mean, the dealers are doing that, but we have some special arrangements with them in the pricing of the product, so that we give them special incentives to open them. At the same time, some these will be like stores with same kind of theme in them, like the facade and the entrance and all those things. There is a guideline design which have been given by us to them, which they are following. So the expense is on major expense is on the gas owner, that is our distributor or dealer. But we have an arrangement with them to give him a special incentive in the pricing of the product, so that they are inclined to sell more. They put more marketing efforts, whereas we incentivize them for their efforts for putting a the gas into their this thing.
Right. Secondly, in terms of your growth outlook for FY23, given there is a substantial delay in your sun control film capacity, and others apart from PPF, other capacities are also running at optimal utilization. So how do you see volume growth excluding your PPF business in FY23?
As we have updated that this has been delay, and that delay was like there are some countries which went to strong lockdowns, and the factories were seized for some of the suppliers because of strong COVID wave. But this month we are already on the dry run. All the equipments have arrived, and it is under the stage of dry run. So in a month or so, we are we'll be doing commercial production. So that will be some of that sales will be definitely reflect in this year's sales revenues.
By when do you expect the sun protection new capacity would be commercialized? I missed that point.
From July onwards, next month onwards.
Okay. So there won't be any capacity constraint in terms of growth?
No.
And lastly, in terms of our pricing model, especially in specialty films business, how often do we revise our prices, and what is the pricing model do we follow here?
On the pricing, we have like base formulas for our raw materials. So there is a quiet period where we do not do anything like plus minus 5% or so. But beyond that, we revise the prices, and these are not. They are subject to our competitors also. But in general, when the prices go up, it goes up for everyone. Like our our raw materials are on import parity basis. So the impact is for everyone. So every month, whenever we release the pricing for the customers, we include that number in that. But what happens is, when the order book is very strong, like 2 to 3 months, there is sometimes a lag of 1 or 2 or 3 months to recover those prices. And same thing happens when it goes down. In that case, we benefit a lot out of it. So it's like we do that on a regular basis, I would say monthly basis, but at the same time there is a lag because because of the order book also, and the supplies happens after 1 month, 2 months or 3 months time, depending on the order book.
Okay, so roughly what percentage of just a follow up on this, yeah. Roughly what percentage of your specialty business would be more than a quarter contract?
Roughly on the, I would say, if I take 70% of specialty business, then around 60 to 70% of that is on that order book basis.
Okay. Okay, thank you. I'll come back in queue.
Thank you.
Thank you. Ladies and gentlemen, in the interest of time and fairness to all participants, please limit your questions to 3 questions per participant. Our next question is from the line of Ankit Gupta from Bamboo Capital. Please go ahead.
Yeah. So, given the kind of success we have seen on the PPF side in US, as well as, the kind of plans we have in domestic market also, how do you see the growth of PPF over the next 2-3 years? How much revenue do you think PPF can generate for us, let's say in FY24?
See, the total top line we expected, we have already shared that the total would be with the lamination line, and this line is 600 crore. The top line capacities, depending upon the market pricing of crude and all those things, like the absolute pricing may go up and down. And as we said, the line is already operating more than 50% of PPF, and the new line is lamination line is expected to start in next month or so. So these will add into the top line and bottom line.
Sure, but let's say, can PPF be a 250-300 crore product for you in FY24 or 25?
That is what the target is. By FY24, it should achieve the full.
Sure. And sir,
we are on track in that direction. Yeah.
Sure. And on the domestic side, the Garware application center that we plan to open, the 200 centers in the next 8-9 months, or let's say by end of FY23, how much money will we be spending on this? How much operating expenses will go in, starting this application centers?
See, as I said, these are basically on operating expense basis. So we are not investing any substantial capex on that. But this is basically owned by our distributors, where we compensate them by giving discounts on the product, which are like a part of volume discount, right? So in that situation, I'm saying that this is a model where we are incentivizing them to or encouraging them to sell more, and they are helping us by opening these and putting those capex on their part.
Sure.
So it's not a strong. In nutshell, I'm saying the capex is not substantial here. Nothing worth mentioning here. But it's basically an operating expense model.
Sure. So we ended the FY22 with revenues of around 1,264 crores, and we have the new capex coming on stream during July, or let's say by Q2 of this year. So how do you see the growth in revenues over the next 2-3 years? I think the new capex is expected to add 600 crore to our top line. So can we reach 1,800-1,900 crore of top line over the next 2-3 years?
Yeah, I'm saying that this is already, as we said, we have 50% utilization of PPF line, and the new line will also start and will be utilized stepwise. So overall, in 2 years target, like by end of FY24, definitely everything will come on top line and bottom line, and we are seeing no major roadblocks for such kind of growth for the company.
So you expect the top line to reach around 1,800-1,900 crores by FY24?
I mean, that I believe. Everything is on right track. So we can definitely reach the numbers which we have done with the aim of these 2 lines running full. We'll definitely reach these numbers or beat these numbers. But this is again, everything is on track, I can say here. You can expect everything is on track, and these lines will start and run full, and we'll achieve whatever we have targeted to achieve.
Thank you. Mr. Gupta, for more follow-up questions, please join the queue afresh. Our next question is from the line of Ayush Agarwal from Analysts. Please go ahead.
Good afternoon, sir, and thank you for the opportunity. My first question is related to PPF. If you can give a breakup of this 1,800 crore that you mentioned that we have achieved in FY22. Out of this, how much was under our own brand and how much of it was white label, if we did any white label?
For PPF, it would be 50-50 because there are many of our customers are now, going towards the OE side, and at the same time there are some big customers who have a strong brand presence. We can also sell it to them. So I would say 50% of the brand, global Garware brand, and 50% on the white boxes.
Because I've been in previous calls and given the wide distribution network that we have in the US, what challenges are we facing in the PPF market, because it is already an established market, and given our distribution network, the scale up in our own brand should have happened a little faster. So if you can explain us what is happening there, and what really are the challenges, or maybe steps that we are taking to sell more under our own brand.
Yeah. See, we have, as you rightly pointed out, we have a strong distributor network in USA, and the brand global is very widely recognized and known brand there. But in that for window films, and we have started PPF on the same line. But PPF is there are people who are there for more than 10 years or so, and we have entered to the market last year only. But we are seeing good sign on that. But when we talk of the challenges is we entered at a time where there was a chip shortage going on, and the cars which output should have been normal, or with a growth of 5 to 7%, which normally US expects. In last 2 years, the growth, the sale of cars have drastically gone down. And so the sale of overall PPF, but there has been some marketing drives, and some companies are trying to more the percentage of PPF applied on cars coming out of the showrooms has increased. So in a way, it has been made up. The short of car sales has been made up by increasing the car percentage application on the PPF. But definitely that has been a big challenge. Had that not been there, the market would have been much easier for us, and it would have been easier to tread on that.
Understood, and that was helpful. So in the next 2-3 years, when we plan to
special mention for all of for everyone about PPF, the questions are being asked. So what we have done to go into a level next, like as we have said, we have started Garware application studios and call centers and influencers. Apart from that, we have also launched. Now there was only one product earlier. Now we have launched 3 products, which are like one category up of our standard product, and one of a little bit economical on that, though quality does not change, but we have now 3 products. So that has actually quickly jumped the sales of the product, and we are expecting further growth because of this particular point also.
Okay, and that was helpful. So in the next 2-3 years, when we plan to achieve full production from a PPF line, what percentage would be looking to sell under our own global brand, and how much would it be white label? Do we have a target for that?
I just answered the question that because this market is there are some big players who have been there. So I would say 50% of global brand and 50% of the white box.
Okay.
Global means Garware plus global would be 50%.
Correct. Okay. And my last question is on our sun control film, since another line of expansion is coming very soon here in sun control, and you also mentioned in the opening remarks that production is a little slow. Car production is a little slow this year, and given the inflation, demand may taper a little. So how do we plan to scale this up? Are we also looking to sell under white label here, or what are the plans for this new capacity expansion?
So for new capacities, we have started a special drive towards the architectural segment. Garware, as a traditionally automotive, we are very strong. We have complete range, and we are very widely accepted brand on automotive. So now we have launched a special campaign towards architectural segments. Even in India, there are many big names which we started to cater. Like I can say the top hotel chain and one of the newest and the largest selling consumer brand, their showrooms, and one of the leading original OE of the car. They all are using our architectural films, and they have approved, and they only use our films on an architectural segment. Earlier, we were doing a lot of airports like Changi Airport in Singapore and Vadodara Airport in India, many colleges and all those things. But now we have launched a sustained campaign. We have put our manpower call centers towards the architectural segment of the business, and which is also now showing good results. As I said, the largest chain right now in India and one of the leading car manufacturers, they all have approved our film for architectural application, and we are continuing such kind of marketing efforts to have that.
Understood. That's it from my side. Thank you for the answers.
Thank you. Our next question is from the line of Vignesh Iyer from Sequent Investments. Please go ahead.
Hello, sir. Would you tell me what is the cost escalation when it comes to power and fuel cost as compared to quarter four? And also, if you could guide me, what is the situation of ocean freight rate when it comes to the freight expenses?
Yeah. Okay. First on freight, the thing is, freight rates have jumped like anything. Everybody is aware of that, and we closely watch that, and we actually thought it will go down in Q4 last year, but unfortunately it did not happen despite a small reduction of 4-5%. But again, it went on to the earlier higher rates. Then after COVID situation, the new lockdown in China, the rates from China to India that have gone down, but the rates and vice versa, but the rates towards the west and west side, especially US and Europe, they did not go down because of this conflict between Ukraine and Russia. Many companies reduced their lines catering to these things. But now again we are seeing a little drop towards the westward, and we are negotiating our contracts in line with that. We are seeing a drop, but we because of this situation, especially oil going so high and the tension between Ukraine, Russia, and anytime Iran can also can jump into that. So we are seeing reduction as of now, but on a longer term we can't say unless things settle down in that line. But our contracts will be definitely lower than what we have done last year.
Okay. So I can assume that the freight rate is now almost on par with what it was in quarter four, right?
Yeah, at par. But as I said, there is an indication which has come many times in the past also, but there is an indication that they will drop.
Okay. So considering in terms of the raw material cost, there's a pass-through mechanism for the company. So can I assume that on absolute level, the EBITDA, we would be managing to maintain it in FY23?
Yeah, definitely. I mean, as if given condition do not change and all those things, we should be able to maintain.
Okay, fine. Thank you. That's all from my side.
Thanks.
Thank you. Our next question is from the line of Keshav Garg from PPIPL. Please go ahead.
Sir, I wanted to understand that in the September quarter of last year, we did 340 crore.
Hello.
Uh, we've lost the connection for Mr. Gar. Our next question is from the line of Ashish Kacholia. Please go ahead.
Congratulations to the team on a very good margin performance in Q4, in spite of all the cost pressures. Are you saying that you will be able to maintain the margins going into FY23, or are you saying that we'll be able to maintain the EBITDA on a absolute basis for the year?
Sir, I would say that there are questions on margin protection on EBITDA level, because last year was a low base raw material, and this year it is high base raw material, and which is quite high as of now with $120 crude Brent is there. But having said that, the portfolio which we are carrying, mostly 70% we are talking of the product which is cannot directly be translated, cannot directly be increased or decrease the price. Price translation cannot happen that fast because of the specialty nature of the business, where order book is 2 to 3 months long. But we are continuously taking those rises, and we have been taking in the current months also. So we hope that this EBITDA margin level should continue what we have set in our last 2-3 years in that.
Okay. Thank you very much, and all the very best.
Thank you.
Your sales growth targets are very encouraging, so my best wishes for that. Thank you so much.
Thank you very much. Thank you.
Thank you. Our next question is from the line of Keshav Gal from PPIPL. Please go ahead.
Sir, I hope my voice is audible. Sir, I wanted to understand that our top line is declining since the past 2 quarters, whereas I'm assuming that we must have taken some price hikes during the past 6 months. So in that case, despite our realizations going up, our volumes are falling. That is why our overall sales number is dropping sequentially since past 2 quarters. So your comments?
So if I can understand your question correctly, you are asking that in last 3 quarters, the top line is constant. And
I'm saying in September quarter we did 340 crore revenue, in December quarter we did 334 crore, and March quarter we did 324 crore. So despite increase in realization through price hike, the volumes must be falling drastically for overall sales number to fall.
Volume is dropping, you are saying, please. Yeah, you are correct. You are correct. You are correct on that, because March has certain global issues, geographical issues. You are aware the Russian-Ukraine crisis were there, and there are some container shortage were there in the market. So the transit time has gone up for stock transit, and the logistic challenges were there. So that's why the volume is going down, but it has been managed by other business, other geography. We have diverted those business, and then we got the top line there.
Yeah.
Yeah, please tell me, sir.
Yeah. So there were like some volume which we could not dispatch for the reason of Russia, Ukraine, and that reason, because the logistics challenges were there. Despite we produced this material, but we diverted and found alternative market quickly, like in US, Europe, and Middle East, where we could sell those products in coming months. So, and the stock in transit was also high, as Mr. Mehta said.
Okay. Sir, and lastly, just wanted to give a suggestion that, sir, our stock is trading below book value. We have 200 crore net cash on our balance sheet. We are net debt free, and we generate 200 crore operating cash every year, so which is more than enough to cover all our capex. Sir, so then why don't we do a share buyback, since our stock is trading in single digit P? So I think we should consider this strongly. Thank you very much.
Yeah, noted your suggestion. We are looking for a few more. We are working on a few more organic and inorganic opportunity. So we can't say anything on buyback now.
Yeah. Okay. Thank you very much.
Okay.
Thank you. Our last question is from the line of Anshul Shah from Alpha Plus Capital Services LLP. Please go ahead.
Thank you for the opportunity again. I would want to reiterate what the previous person had said. We are sitting on net cash. Why don't we do some buyback so that there is shareholder value created? Also, I just wanted to understand, there has been issues with, the senior management, a lot of directors quitting and rejoining. So could you please clarify on that? I mean, what is the succession planning and, is the company in good hands?
Yeah. Actually, if I say about, it's not exit or something. It was like Mr. Pathak was retired because he was due to retire. And after that, we have, hired the COO at the plant who looks after the entire operations in a view to increase the efficiency and the productivity. Because even after, we believe that after PPF running full and new plant running full, we still need to debottleneck our plants to give the maximum product output. So in view of that, we have hired a new COO here. And at the same time, 3 months back, we hired a president operations in US because that is our key market where we need to grow. So company's focus is in continuous growth, producing more products and having a right marketing strategy to sell all geographies around 88 countries in the world. We are strongly present. So we have all the functions headed by experienced person. So I would say that you are in the right hand that we can say. And lastly, the promoters, they are involved on all decisions and including operations of day-to-day operations wherever required the guidance from the promoters. It is always there. So I can hope I have answered your questions.
Yeah, and one last question. Is there any plans for the non-core assets that we hold in form of excess land or whatever that we have? Because that is kind of a drag on all our return ratios and everything. So do we have any plans on that?
Yeah.
Monetizing?
Yeah, we are as of now focusing growth on all aspects. As you have seen the top line growth from last year, 21 to 22, and we are focused on further growth with new investments and all investments and new value creation. So such in terms of land bank monetization and all those things will be taken at the appropriate time. And whenever board decides on that. As of now, the focus of the company is on continuous top line and bottom line growth with the strong right team at the right place and the strong marketing capability.
Fair enough. One last bookkeeping question. I think in your earlier presentations, you always used to give a breakup between, your CPD, IPD and thermal. So can I have that breakup for the year?
That is also available right now. If you see this current presentation also, so it is available there. But it's not specifically mentioned that it is IPD or CPD.
So would you consider how would you consider your plain film and packaging film in IPD?
That will be in IPD.
Okay, fair.
So for each of your understanding, you can consider sun control as a separate, and then thermal is already given in the separately. The rest of is IPD part.
Okay, fair enough. Thank you. That would be all from my side.
Okay.
Thank you. Our next question is from the line of Ashish Kacholia from Lucky Investment Managers. Please go ahead.
Yeah, my suggestion basically, sir, is that we have big opportunities coming up to grow. and therefore we should conserve cash. And I would respectfully disagree with the comments of some of the other participants about asking for a buyback. I think we have huge opportunities to grow. I think we should conserve our cash and reinvest back into the business so that we have the firepower to kind of seize any opportunities that come our way. Your capital allocation track record has been fairly good, and we run a very conservative ship. So I think you should conserve the cash and kind of look to drive the growth of the company through very good acquisition opportunities. If we get some players might be available in distress, if we can buy some distressed assets in these distressed times, if we have the cash, we can do all such things. So I think we should use our cash and kind of try and buy some good distressed assets and see if we can put our technology and abilities to kind of turn those assets around and squeeze good ROI out of those. My thought would be like that. All the best.
Yeah, thank you. Thank you for your suggestion. And we have noted that, so we'll internally review that thing. And thanks for your suggestion.
Thank you very much. Ladies and gentlemen, that was the last question for today. And I would now like to hand the conference over to Mr. Deepak Joshi for closing comments.
Yeah. Thank you once again for participating in today's earnings calls and your continued interest in Garware Hi-Tech Films Limited. Our IR team, Blue Lotus, will be available for any follow-up questions you may have. Wishing everyone a great day ahead. Thank you very much. Thank you.
Thank you very much. On behalf of Garware Hi-Tech Films Limited, this concludes the conference. You may now disconnect your lines. Thank you for your participation.